Hello YouTube friends, and welcome to Grow Money Seeds, a channel about building wealth and managing your money. One of the most basic option strategies for an option seller is a single-legged option strategy called a cash secured put. The idea of this strategy is to sell a put against an underlying that you would like to own. If the price of the underlying stays above the strike price of the put at expiration, then you get to keep the full credit you were paid for the put. And if it does not, then you get to buy 100 shares per contract of that underlying at a discounted price. Right, let's talk about this. Did you know that studies have shown that put selling outperforms other traditional investment strategies? In fact, selling puts beats a buy and hold strategy, both in terms of profit and loss and return on capital. This is what makes a cash secured put such an attractive option strategy. Now, before we do anything, I can't stress this point enough. Only enter a trade when you have a clear plan from start to finish. Always know your entry point, setup, exit point, and the trade management plan. Okay. So what's the entry point when using a cash secured put? The most important thing to remember is to use the strategy on a stock that you would like to own, and you need to make sure that you have enough cash available in your account to buy the shares if you're assigned the stock. I would personally look at good growth stocks in an uptrend. Some examples would be Apple, Square, Facebook, AMD, Netflix, Amazon, Salesforce, Google, Alibaba and Fiverr. On a side note, it's better to get into the trade on a down day or after there has been a sell-off. There are two reasons for this. The first reason is that on a down day you will be paid a slightly higher premium. This is because volatility increases. And the second reason is that it also gives you a better price if you're assigned the stock. Finally, I would not hold this trade over earnings, as this can cause unpredictable price movements. Okay, so let's say I'm looking to buy 100 shares of Apple. The current price of Apple is about $130 a share, but I would be happier to buy the shares if the price was about 10% lower than its current price. This is where I would use the setup of a cash secured put. What is the setup for this trade? Research has shown that the optimal setup is to sell a put that is between a delta of 20 to 30 and with 40 to 45 days to expiration. Let's head over to the Thinkorswim platform and place the trade. Firstly, click on the Trade tab. Enter the ticker symbol AAPL for Apple, and this will display the option chain. On the left-hand side, you will see the date and the number of days to expiration for the various option contracts. Select the date that's closest to 45 days. Make sure you have the layout selected to display Delta, Gamma, Theta, and Vega, and you have strike selected as all. You will now see all the available calls and puts in the option chain. Make sure you're looking at the column with the puts, and scroll to select a delta of around 25. This means that there is a 75% chance that the stock's price will stay above the strike price at expiration, and you will receive the full credit for selling this contract. Click on the bid. This will open an order entry. Before sending the order, just make sure the order is to sell a put, and the strike price, expiration date, and the correct number of contracts is all correct. Do not sell too many contracts, because if the price of the stock falls below your strike price at expiration, you'll need to have enough cash available to buy 100 shares of stock per contract. For this one contract of Apple, this would be approximately $13,000. Finally, this is a limit order that is good for the day. Then click Confirm and then Send. Once the order is filled, it will be displayed under the Monitor tab. The final part of the setup is to set an alert if the price of the stock falls below the strike price. This is for management of the trade, which we'll discuss a bit later. To set an alert, click on the Chart tab, right-click on the chart, and then Create an alert. Enter the strike price for the alert. Then enter a note, for example, strike price of cash secured put breached, roll or close. Then click Create. What is the exit point of the trade? Again, research has shown that it is best to exit the trade with a 50 to 60% profit of the credit received. Now, you might be asking, why don't you leave the trade to expiration and take the full credit? The reason for this is by taking profits early and redeploying the profit from the trade. This minimizes risk and it also significantly improves returns. To do this, click on the symbol to show the credit received for the put. Take the credit which is displayed under the trade price and multiply this by 0.5 for a 50% profit or 0.4 for a 60% profit. You can use a calculator to do this. Right-click and then select Create Closing Order. We want to buy the put back for 40% less than we sold it for, which is a 60% profit. Once the order entry is opened, change the price to the calculated price and the order is placed as good to cancelled. Then click Confirm and then Send. If the price of the underlying goes up, stays the same or drops slightly and it is above the strike price at expiration, we will make 60% of the premium due to time decay and the trade will auto close for a profit. We can then rinse and repeat the strategy. How do we manage the trade if the price of the stock falls below our strike price? The first thing you can do is nothing and let the trade run its course. Remember, the idea at the beginning of the trade was to acquire the shares at a price less than was currently trading for. If you are assigned the shares at expiration, you could hold them as good growth stocks tend to generally recover and this will offset any losses. Or you could sell calls against the shares, which is called the wheel strategy, but this is a topic for another video. If you don't want to take assignment of the shares, then the second thing you could do would be to buy back the option and sell a new one at the same strike further out in time or at a lower strike further out in time for a credit which is known as rolling. Rolling a trade should only be done if you believe the price of the stock will recover. Just be aware that rolling will tie up your capital for a longer period of time, but it will lower your cost basis as you will collect more premium for the roll. I would only do one roll. If the short strike is breached again, I would take assignment or exit the trade for a loss. Finally, if you think the price of the stock is not going to recover because there's damaging news, then you could just close the trade for a loss and move on to the next trade. Let's look at an example of rolling. Thinkorswim has a feature where it will automatically calculate the roll for a credit. So if the alert is triggered and the price of the stock has breached the strike price, we would go to the Monitor tab, click on the symbol, and then right-click on the short put and select Create Rolling Order. To place the order, click Confirm and then Send. Personally, I prefer to go out a bit further in time and lower the strike price for a credit. This gives the trade more time to work out, and if I'm assigned the stock, I will get the shares at an even lower price. This adjustment of changing the expiry date and the strike price can be done in the order entry. Just make sure you are still receiving a credit and not a debit for the roll. Remember that once you have rolled the position, set an auto close for profit and an alert if the new short strike is breached. In summary, always have a trading plan and only sell a cash secured put on stock that you would like to own and you're bullish on the stock. Make sure that you have sufficient funds to buy the underlying stock if the price falls below the strike price of your put. Try to enter the trade on a down day or after a sell-off. Take profits and auto close for a 50 to 60% profit. The trade is managed by taking assignment of the shares, rolling the put, or closing the trade. If you've enjoyed this video, then please click the subscribe and the like buttons. This shows support for my channel and you'll be notified when the next video is released. Thanks for watching and I'll see you in the next video.